The Indian kitchen appliance market, something we all use every day, but, well, things haven't been entirely smooth sailing for the sector recently.
No, definitely not. The last couple of years, say FY23 to FY25, have seen some significant headwinds.
Exactly. So for this deep dive, we're looking at a thematic report from Share India on kitchen appliances. Our goal is really to unpack the challenges the market's faced and, more importantly, figure out what the analysis suggests is coming next.
Precisely. We'll be pulling apart the recent slowdown, looking at what's pointing towards a potential recovery, and maybe even see which companies seem best placed for what's ahead.
Think of it as a quick way for you, the listener, to get up to speed on this whole space.
hmm
Okay, so let's kick things off with what didn't go so well over the past couple of years, FY23 to 25. It sounds like a big part was just consumers choosing to spend elsewhere.
That's a major factor, yes.
Mhm.
After that initial sort of post-COVID buying surge for home goods, it seems spending shifted.
Shifted where?
Well, towards other discretionary things. Think travel, entertainment stuff people had put off. So while kitchen appliances are obviously necessities, they perhaps became a slightly lower immediate priority for some.
Okay, that makes sense. And it wasn't just what people bought, but where, too. The report talks about a big jump in online sales. How did that play out?
Ah, yes, the online channel. It definitely grew, but it also brought challenges. You had significant discounts online, which really put pressure on the traditional brick-and-mortar stores of general trade.
Right. And the organized players, the big brands, maybe weren't discounting as heavily?
Often, no. And there were even mentions of smaller players possibly dumping inventory online at low prices. It really shook things up for the established channels.
Yeah, you can see how that would disrupt things. And then there's this link to the housing market you mentioned, like construction delays having a knock-on effect.
Exactly. It's about the lag.
Hmm.
The report notes fewer residential project launches back around FY17, plus the COVID disruption in FY20.
And there's usually, what, a 4-year gap between launch and people moving in and buying appliances?
Roughly, yes. So that earlier dip in launches meant softer demand for appliances in that FY23, FY25 window.
Hmm.
People just weren't setting up new kitchens at the same pace.
But that's picking up now, the launches.
Yes, thankfully. We've seen a revival more recently in both launches and actual sales, which is key for the future outlook.
Okay. And it wasn't just an urban story, right? Rural markets had their own issues, something about microfinance.
That's right. In rural areas, MFIs, microfinance institutions are pretty important for enabling purchases like appliances.
Small loans, basically.
Exactly. But they faced issues with higher NPAs, non-performing assets, or bad loans, which meant they issued fewer new loans for a while.
And that directly hit appliance sales in those areas.
It certainly dampened them. The expectation is for a gradual recovery there starting FY26, but it was a drag during that FY23-25 period.
So if you pull all that together, the spending shifts, the online discounting, the housing lag, the rural credit issue, you can see why growth stalled, can't you?
Absolutely. The report shows pretty flat revenue growth for the main listed players during those years.
Which is a huge contrast to the boom during the main COVID period, FY19 to FY22.
A very stark contrast. That earlier period saw a big spike, likely because everyone was stuck at home, cooking more. This recent flatness really highlights the impact of all those headwinds combined.
Okay, but it's not all doom and gloom. The report suggests we might be turning a corner, maybe starting FY26. What's driving that optimism?
Well, the main thing is an expected sort of broad revival in consumer demand. People who put off buying a new mixer or fridge might finally go for it. Pent-up demand, basically.
And what about that online versus offline tension? Does that ease up?
The thinking is yes, or at least it stabilizes. We expect better sales coming through general trade again, and maybe online pricing won't see quite those extreme discounts as things normalize.
Okay. And the housing market factor, that sounds like it could be a really big boost.
Potentially, yes. Those projects launched after the main COVID waves, say in FY21 and early FY22, they should start getting handed over around now through 2025.
Right. So new homes needing new appliances.
Exactly. And launches picked up again later in FY22 and into FY24, so that feeds demand further down the line too. The report actually puts a number on it.
Oh, yeah.
It estimates something like $8,138 million in extra revenue just from this for listed players in FY26. That's about 11% of their estimated total revenue.
Wow. Okay, that's significant. Shows how linked those sectors are.
Definitely.
And you mentioned government schemes potentially helping, too.
Yes, this is interesting. Schemes focused on women, tax benefits. The idea is they could increase disposable income for women.
Who might then prioritize buying kitchen appliances.
That's the thinking. It could even help offset some of that weakness we saw from the microfinance channel, especially in rural areas. States like Maharashtra, Haryana, MP, West Bengal, Odisha, Karnataka have programs like this.
So a mix of macro recovery and these targeted initiatives. Now, what about the companies themselves? The report talks about established players fighting back, trying to regain share.
Yeah, and it's quite strategic. We're seeing big players who maybe traditionally focus more on premium stuff now making a real push into the value segment.
How are they doing that? New brands.
Sometimes new brands or sometimes really strengthening their existing budget-friendly lines.
Any specific examples?
Sure. TTK Prestige is putting money behind its Judge brand for the economy end. It's small now, revenue-wise, but they expect it to grow.
Okay.
And Kraft, with their Pigeon brand, which is already a huge part of their business, they've been aggressively opening exclusive Pigeon stores and broadening the product range there.
So they're really going after that value-conscious customer.
Seems like it. It's about covering all the bases.
Makes sense. And it's not just the domestic market anymore, is it? Exports seem to be a growing story.
Absolutely. This is a really interesting angle. Indian manufacturers, particularly in nonstick cookware, have become globally competitive.
So they're leveraging that manufacturing strength?
Exactly. Tapping into international markets. It's a new growth engine for them.
Who's leading the charge on that front?
Kraft looks pretty strong here. They've got partnerships with big names like IKEA and Walmart. Their aim is quite ambitious, getting exports to maybe 25% of revenue by FY28 or 29.
Wow, up from about 12% now.
Yeah, roughly. And TTK Prestige is also expecting exports to pick up, with bigger orders expected in FY26. So it adds a whole other layer to their growth potential.
Okay, so we've got the past struggles, the signs of recovery, shifting strategies. What does this mean for valuations, for investors looking at this sector?
Well, the report points out that valuations have come down quite a bit. They were perhaps in the 40-45 times forward earnings range. Now they're more like 20-30 times FY27 PE.
Which the report calls compelling.
Right. This correction over the last, say, 8 months or so might make things look more attractive. You see this trend with TTK Prestige, Kraft, and apparently similar patterns for V-Guard and Hawkins too.
And does the analysis point to any companies being particularly well-positioned for this rebound?
Based on this report, yeah. It suggests Kraft and also Butterfly Gandhimathi, which is part of Crompton now, could be well-placed to benefit from demand picking up and maybe see their valuations re-rate.
What about costs? Raw materials are always a factor, aren't they? Steel, aluminum.
Crucial factor. The report says it's a bit of a mixed bag right now. Steel, aluminum, copper, even container freight rates. No clear trend across the board?
But potentially could become a tailwind if prices ease.
Potentially, yes.
Yeah.
If those input costs moderate, it could definitely help margins.
So summing up the outlook, we're moving from a tough patch to potentially much stronger growth. What are the overall industry growth numbers looking like?
The forecast is for a pretty significant jump. We're talking maybe 9% to 11% growth per year in FY26 and FY27.
Which is way up from the roughly 5% average growth we saw between FY20 and FY24.
Exactly, a real acceleration. The report even hints at a possible demand-supply gap, around 4%, suggesting companies will likely keep investing in capacity.
Like the planned spending by Kraft and TTK Prestige you mentioned.
Right. Kraft spent around $4 billion over FY 2024, and TTK has plans for about $5 billion by FY 28. They're gearing up.
Okay, so let's try and wrap this up. It sounds like the Indian kitchen appliance sector went through a tricky couple of years. We had shifts in consumer spending, online disruption, housing delays, rural credit issues. Quite a list.
That covers the recent history pretty well, yeah.
Yeah.
A challenging period, but crucially, the analysis suggests a recovery is definitely on the cards.
Driven by what key things again?
Pent-up demand finally being released, that boost from new homes getting finished and needing appliances, and maybe some help from those government schemes aimed at women.
And we're also seeing the big players adapt, focusing on value segments alongside premium and really pushing exports too.
Exactly. Those strategic shifts are important. Exports especially seem like a growing part of the story.
So considering all that, it makes you wonder, doesn't it? How might the actual appliances in our own kitchens change over the next few years? You know, which brands might we see more of as this recovery plays out?
It's a great final thought, how these big economic forces and changing consumer habits actually filter down to the things we use every day in our kitchens.
Sure.
Fascinating stuff.